Good afternoon, ladies and gentlemen. Welcome back to our third quarter earnings forecast. We are now joined by Mr. Vineet Agarwal, Managing Director at Transport Corporation of India, the nation's largest chain transporter spread across road, ports and railways as also air. Good afternoon to you, Mr. Agarwal, and a very warm welcome. You've shown a fantastic rise in top line. 1042 crores versus 944 crores year-on-year comparison for the third quarter, and profit after tax in the quarter gone by was 118.2 crores versus 95 crores a year ago. Against the backdrop of a slowing economy, Mr. Agarwal, how are these numbers achieved?
Hi, Sharendra. Always good to be back. Actually, what is happening is that there are certain sectors that we've been focusing on quite for the last several quarters, and we are seeing that those fructifying into results in this quarter. You're absolutely right that there is a slowdown in the economy, either not just from the consumption side, but also the expenditure. Government expenditure has also slowed down, capex has slowed down. So all of that has had an impact on the economy as a whole. We have focused on several sectors which we've seen good growth. For example, new and upcoming areas, whether it is renewable energy, whether it is quick commerce, whether it is defense logistics, chemical logistics. These are areas that we are focused on. And the modes of transport. So other than the road transport, we do sea transportation, that is coastal shipping. We also have rail movement that is quite a large movement for our clients. And these kind of new areas that we've been focusing on has certainly helped the company to be better than its peers as well as the broader economy.
Fair point. So it's one expansion into the right focus areas and perhaps a lot of internal efficiencies that have resulted in this strong year-on-year and quarter-on-quarter performance. Mr. Agarwal, let's look at the next 3 quarters ahead. Everybody, whether it's in the political setup or the broader macro setup, has realized that this is a slowdown, whether cyclical or structural, we don't know as yet. But at TCI, how are you planning the next 3 or 4 quarters in terms of expansion? Do you see your traditional customers sort of holding back on maybe greenfield or brownfield projects? What is the gut feel? What is the pulse that you're getting from corporate India?
Well, there is, I think Q4 of the year usually is the best quarter for most companies. This is the time when corporates are closing their books. There is a push towards sales. And generally, there is a little bit more upbeat. Government spending also increases because they're trying to cover the budgets, etc. So we see this as a good sector, good time of the year to accelerate growth. Notwithstanding, we have a capex plan of about 375 crores, out of which we think we'll get to about 250 odd crores of the plan. The quarters post that is Q1 of FY26, is usually the weakest quarter. This is the time when companies are consolidating, the annual plans are being put up. The budget, the union budget would have come through, which is next week onwards. People would start making the plans for FY26. So there's also the onset of monsoons in many parts of the country then. So things tend to slow down a little bit in the first quarter. And then the preceding quarter, the forthcoming quarter after that is the Q2, where people start stocking for the festival season that's going to come. So it is a good indicator in terms of, and you have rightly asked the question to the next 3 quarters, the trends are essentially going to be more a bit up and then down and then subsequently up as well. As logistics service providers, we actually get to see the economy a little bit more faster than the numbers coming out because we are able to see what is really moving, what is not moving. And that gives us a little bit better perspective of planning.
Mr. Agarwal, for the last 25 years that I have been tracking you, you are the leading indicator of the economy. If TCI does well, one presumes that the wheels of the economy are moving fast, they are well greased, and we should see good quality growth coming in. Now tell us in very simple English, what is moving in India and what is stagnant or actually slowing?
So consumer-related things are definitely slowing. I mean, consumer durables, FMCG, etc., are definitely much slower. I think there was a lot of push towards building that across the system. The inventories were quite high. Even at consumer levels, inventories were high.
Hmm.
Then what is moving is, for example, two-wheeler sales are very good. We are seeing four-wheeler sales are decent.
Hmm.
Earth-moving equipment is lesser because infrastructure spend has not been that high. I mean, it has been there, but government is not will not be able to fulfill its budgetary promise of 11.1 lakh crores. So that will mean that in earth-moving equipment companies, etc., the movement is slow of the equipment. Tractors is a bit slow. I think now it will start picking up. Other than that, industrials is still decent. I think some of the trickle down effect of the infrastructure spend is coming down all the way to some industries where, let's say, if there's a metro project that's coming up. Now you
Hmm.
need equipment for that. You need transformers for that or other electrical equipment. That seems to be reasonably okay. So like this, I think there's mixed pockets of growth. Remember that we are still growing at 5, 6, 7%. Now that's
Hmm.
not a small number from an overall GDP perspective or the quantum of growth that's coming about.
Okay. There was also anecdotal evidence suggesting that parcels and packages in this new economy, which is digitally led, the online ordering system, is also showing signs of maybe slowing growth, if not maybe a pause. So, how is the e-commerce space, which TCI handles, performing?
Not bad. I think what is happening is that there is an expansion that is taking place of many of these companies across the whether we see they are in the space of quick commerce or just generally on the e-commerce side. Quick commerce is, as we know, is rapidly expanding.
Hmm.
So you go off with a very high growth initially, and then some of that tapers off. But the overall growth of many of these companies continue because they're adding new territories, they're adding new
Hmm.
areas, new zones, and new cities. And when those come up, that's where they ask for services from us, which is essentially what we do is fulfillment centers for these companies. And these fulfillment centers are at all these major cities or small towns also they're starting to come up. Um,
Okay.
that fulfillment center services the dark stores, which services the consumers. So we are only at the back end, and that remains a robust growth opportunity still.
Mr. Agarwal, nothing in this country moves unless you green flag it. The reason why I asked about hyperlocal as well as quick commerce was this is a hyper growth area that is scaling up rapidly. While it has been a market darling over the last one year or so, but there are signs where this business seems to be slowing in that traditional courier area, which used to be really big maybe 2 decades ago. Uh, when you look at the new economy in India, what are spaces where you see these dark stores putting up the maximum inventory, and is that a space where TCI is addressing aggressively over the next 3 quarters or so?
Well, wherever there is concentration of people, because concentration of people would mean more orders and more frequency of orders. High density locations is where we will see that many of these dark stores will start coming up, or they have come up as well. We are not into the business of actually running dark stores. We are into the business of fulfilling the dark stores.
Yes,
So
correct.
wherever those dark stores come up, and subsequently there are opportunities to start running fulfillment centers, we are very happy to do that for our clients. And interestingly, now these fulfillment centers are not just storage locations, but also cold storage. So we are delivering both cold as well as dry products to these dark stores, which has been an interesting mix in the last few months of this journey of ours with the commerce guys.
Okay, over the next 3 quarters, where are the maximum investments that TCI is doing in terms of capex aimed at?
So our a big spend has been in the last few months in on trucks. and containers that we bought. We placed an order for 2 ships that are going to come in 2026, in the middle of 2026. So some advance payment has gone for that. We've invested into warehouses and hub centers and into racks and IT systems. So that's the extent of the about 175 odd crores of investment that has already happened. Again, as I said, about 250-ish is what we expect to end by the end of financial year. And the next financial year is also, we're looking at in the excess of 350 to 400 crores of capex.
Right. With that, Mr. Agarwal, we'll call it a day as far as the third quarter performance is concerned. Looking forward to meet you again over the fourth quarter and, of course, the subsequent 3-month earnings as well. Have a nice evening and a wonderful year ahead.
Thanks, Shailendra. Thanks a lot. See you soon. Take care. Bye.
This was Mr. Vineet Agarwal, the Managing Director of Transport Corporation of India, the country's largest mover of equipment and goods across corporate India. I hope you enjoyed the conversation as much as I did. Thank you so much for your time.
One of the most important conversations at the World Economic Forum in Davos has been around the impact that